Great. Good morning, everyone. Thank you again to the SA Accounting Academy for inviting me to talk about a topic that I'm quite passionate about. Really good to be here with all of you again. Today, I'm going to be talking about how accountants, how you can assist SMEs, assist your clients with accessing business funding. This is obviously a topic which is really important, particularly in this economy in a post-COVID world, and also after all of the looting that we've seen across South Africa over the last few weeks. Businesses are in need of funding more so than ever, and so accountants we're seeing are playing a more important role in assisting their clients and SMEs around South Africa in accessing funding. So I'll be talking a bit about that today. Just to introduce myself, I am Dan Goldberg. I'm the CEO and co-founder of Bridgement. Bridgement is a fintech which specializes in business funding for small businesses and SMEs around South Africa. And I'll talk a bit about what we do on the back end of the presentation. But to dive right into it, so I'll be talking a bit about the state of SME finance, the state of SMEs in South Africa at the moment, and what we've seen in the market. I'll also be talking through some tips for accountants in particular, who are playing a really important advisory role to their SMEs, assisting them in managing their cash flow, managing finances, and getting through the last few months of lockdown with COVID, and of course also getting through the looting and the effects of that if they've been affected. I'll also be talking about SME funding in general and doing a sort of crash course on that and how that works, what the different options are, what some of the pitfalls are, things to look out for in South Africa. And then I'll also be talking a bit about the fintech funding landscape and solutions for SMEs in South Africa. So maybe just to jump into the state of SME finance, one of the metrics that I always like to show and talk about is the Small Business Monitor, which is an index that was created by Yoko and IOL, and they basically have been tracking where the revenue of SMEs collectively is sitting compared to a pre-COVID world, so basically compared to March of 2020. And when we looked at the stats a couple of weeks ago, towards the back end of June, we saw that the total revenue that businesses were doing, they were sort of only at the 78% mark. So they're only doing 78% of the turnover or the revenue that they were doing in March of last year, March 2020. This obviously fluctuates, it goes up and down, and as we went into the hard lockdown in July, that obviously would have gotten worse. And now, as we've come out of adjusted stage 4 of lockdown, that would have gotten better. And it does also vary depending on which part of the country you're looking at, which province you're looking at, and of course, very importantly, what industry you're looking at. We've seen over the last year or so, the retail, consumer-facing sectors, food, drink, hospitality, tourism, healthcare, hair and beauty, fitness, etc., are some of the hardest hit industries. And this sort of tracker or index has largely focused on those businesses. So important to note that there is a big difference depending on the industry you're in. And this picture could look very different if a business or a client of yours is in manufacturing or wholesale or industrial services or construction, mining, agriculture, etc. But still very useful to get a sense of where the SME landscape is in terms of turnover and the recovery towards getting back to where they were in a pre-COVID world. What we've also seen is that online searches for business funding, business loans, really peaked during the first wave last year, around the 1st of April. And that obviously came down quickly after that, but it has still remained heavily elevated over the last year. And from Bridgement's perspective, we've seen a massive influx, receiving applications for funding in excess of over 5 billion rand over the last 12 months. And what we've seen in the market, Bridgement seeing from through our partners and through our clients, is small businesses, SMEs are getting squeezed in every direction. So we're seeing them get squeezed by banks, landlords, government, customers, as well as suppliers. On the suppliers side, we're seeing that suppliers have stopped offering trade credit, and they've started demanding COD or upfront cash payments. And also, the trade credit insurance landscape has also dried up, which means it sort of has a knock-on effect that suppliers are now unable to get trade credit insurance, and therefore they feel less comfortable to offer trade credit. And so when an SME goes and buys from a wholesaler or a supplier, that supplier no longer will give them 30 days to pay an invoice or 60 days to pay an invoice. They'll demand cash up front. So that obviously puts pressure on the cash flow of the SME buying from that supplier. We're also seeing pressure from customers, especially where the customer is a corporate client or government, where SMEs servicing large corporates and governments are getting paid. It's taking longer for them to get paid. So corporates, governments are taking longer to pay their SME clients, to pay their invoices. And again, that puts pressure on their cash flow. They're having to pay, SMEs are having to pay their suppliers quicker, and they're getting paid slower by their customers. And so it has almost like a double effect in terms of impacting their cash flow. One of the interesting things that we've seen across the industry is that banks and traditional credit providers have really reduced their risk appetite over the last year. And we're seeing this play out in many ways, one of which is that banks are seriously reducing the size of overdrafts that they offer their SME clients, and sometimes even completely shutting them down. And as you can imagine, there are many businesses that rely heavily on those overdrafts to trade into and out of every month, to buy stock and have them assist with cash flow until they have the time to actually sell that stock. And so reducing or removing their overdrafts puts massive pressure on their ability to manage cash flow. We've also seen, and I think also to touch more on the banks and the credit providers, we saw at the beginning of COVID last year, a lot of payment holidays were granted, which was a great move by the banking and financial services sector. But unfortunately, those have come to an end largely, and businesses are now left, having to pay some of the interest that would have accrued over those payment holidays, and no longer are receiving any more payment holidays. And then, in terms of landlords, similarly, many businesses got rental holidays or some sort of allowances or reduced rent over the course of last year. And we've seen that has largely stopped, and business and landlords are no longer willing to offer those sorts of allowances, or are a lot less likely to do so. And some of them are even, looking to make up for some of the lost rent over the course of COVID last year. And then lastly, government obviously launched a number of relief measures. They had the amazing idea to launch the 200 billion rand COVID loan guarantee scheme, and that's come to an end now, just now in July. And unfortunately, even though it was a great idea, the execution or the rollout of it was not very effective, and most of the funds didn't actually end up getting deployed. And to actually zoom into that a bit more, so we looked at some of the stats that came out of the government COVID loan scheme. 200 billion rand was allocated for that COVID loan scheme, which they obviously were issuing through the banks. Businesses didn't apply directly to government. And there were many shortfalls at play, many reasons why it didn't necessarily work. But we saw very high decline rates, a major processing backlog, and many businesses just didn't apply. I think many businesses were disheartened and didn't, think that they'd be able to get approved for that funding. And others were also scared to take on additional debt because of the uncertainty of COVID over the course of the last year. What we saw ultimately was that resulted in only about 18 to 20 billion rand of the 200 billion being actually funded or deployed to SMEs, actually landing in their hands, which is hugely disappointing. That's less than 10% of the initial 200 billion that was allocated. And if you look at the total number of applications that were approved, which was around the 15,000 mark, and you look at the total amount of funding, the 18 billion that was actually lent out, you see that the average loan size was around 1.3 million rand. And what that tells you is that the types of SMEs that were getting these COVID loans were sort of mid to larger size SMEs, and the smaller businesses were largely overlooked. The smaller businesses that needed a couple of 100,000 rand to get by, unfortunately, were largely overlooked, as you can tell from the sort of average loan size. So really quite unfortunate. It was an amazing program that the government launched, but the actual execution or rollout of it, unfortunately, wasn't done very well. So moving on to some tips for accountants, we work very closely with accountants, and we'll talk a bit about that. But we've obviously been seeing the role of accountants evolve over the last few years, and we've seen more and more that accountants are shifting into an advisory role, really playing a key advisory role when working with their SME clients, the business clients. Some of the interesting stats that we've seen comparing a sort of pre to a post-COVID world, and these stats came from a study that Xero released over the course of the last few months. They found that the portion of SMEs wanting their accountants to act as a full-on business consultant changed or increased from 11% of SMEs in a pre-COVID world to as high as 28% in a post-COVID world, so more than double. So really a significant shift in how SMEs view the role of their accountants, and expanding the sort of services that accountants offer, and becoming more of a business consultant and playing more of an advisory role. We also saw that the portion of SMEs wanting accountants to manage finances and provide advice increased from 29% pre-COVID to over 37% in a post-COVID world. So really illustrating the shifting of the really important role that accountants play, and moving into more of an advisory role as time goes by. And so some of the tips that we can give from a technology point of view for accountants advising SMEs during and after lockdown, during and after COVID, and this equally applies, I think, during looting or just after all the looting that we've seen. So first of all, we always say, choose and invest in the right tech and the right apps, and investing the time, in choosing the right solutions and providers for your needs is really worthwhile, and it will pay itself back. You'll quickly recoup the value of that in the time that you'll save by picking the best providers out there. Secondly, know your numbers and plan ahead. That's an obvious one, really important. But having an up-to-date view, a real-time view of the business's cash flow and their financial position really allows you to plan more easily, forecast better, make the right decisions. And there are many cloud accounting apps like Fathom and Sift who make this a lot easier and help with this sort of real-time tracking and planning for these sorts of things. Thirdly, use tech to find funding. So a fintech credit provider like Bridgement makes it really easy to access funding for SMEs in South Africa. By simply connecting your accounting package, QuickBooks, Xero, Sage, you're able to get funding in less than 24 hours. So really, really simple, and it removes the need for all the paperwork and hassle and documentation that would typically be required with a bank or a traditional institution. We'll talk a bit more about that a bit later. And lastly, automate the administrative tasks. Obviously, this is one that we've heard a lot as well. But there's a massive opportunity to use tech solutions such as Dext, or formerly Receipt Bank, to automate the tedious and repetitive tasks like receipt capturing and expense claims, etc. So really spend more time on the more important commercial and operational tasks, and free up your time to play more of a business consultant or advisory role to your SME clients. More than ever, SME clients need assistance in managing cash flow. We're seeing this more and more. And you have the opportunity now to assist them in managing that cash flow by leveraging cloud accounting apps to do better budgeting and forecasting, and having real-time views on their financial situations. Also identifying opportunities to negotiate longer payment terms with suppliers. I mean, it goes back to what I said in the beginning, where SMEs are experiencing cash flow pressure because they're no longer getting good payment terms from their suppliers. And there's definitely an opportunity to help SMEs negotiate with their key or their bigger suppliers in getting better payment terms. And on the other side of the coin, there's obviously the ability and the opportunity to negotiate better payment terms with big customers, clients, whether it's a big corporate account that you might have or even government, offering, I think many of the larger corporates and government departments out there might offer some sort of accelerated payment programs, and it's always worthwhile inquiring about those. And with smaller clients and customers, is the ability to offer, discounts for earlier or quicker payments. There's also the opportunity to reassess existing debt, explore options to consolidate and restructure debt, potentially even extend it, to take off the pressure from a business's cash flow. There's the ability to source alternative funding online. Touched on that a bit earlier, but with the advent of fintechs like Bridgement, accessing funding is a lot easier than it used to be. And then, of course, is ensuring continued compliance and assisting SME clients with applying for the many government grants and relief programs out there to help them, sometimes access the necessary relief that they need to get by for the next few months. One of the interesting things that we've seen personally at Bridgement is that accountants have really started playing a much bigger role in assisting their SME clients in accessing funding. So much so that we actually, in the last 12 months, have seen 180% increase year-on-year growth in terms of the amount of funding being sourced by accountants on the behalf of their SME clients. So really seeing a massive shift towards SMEs relying on their accountants, helping them to access business funding. So one of the questions that we sometimes get asked by accountants is, what's in it for me? Why, as an accountant, should I help my clients source funding? And I think firstly, I mean, we've touched on this already, but as accounting is increasingly automated, bookkeeping is increasingly automated, you have more time to play a trusted advisor or business consultant role. And that also gives you the opportunity to build new value-added services and expand your service offering to retain your clients and create more of a sticky offering to your clients, catering for more of their needs. And one of the ways in which you have the ability to expand your sort of value-added service, expand your offering that you offer to your SME clients, is to assist them with accessing funding. And what that can do for you as an accountant is, one, it helps you grow your clients. So, obviously helping your clients access and source the funding that they need will help them expand their businesses. And their businesses growing and expanding will mean they'll need more advice, more time, more consulting from you as their accountant. And so, it's almost like a win-win. Helping them to grow also helps you as an accountant or an accounting firm or practice to grow too. Two, it helps strengthen existing client relationships. Businesses are immensely grateful to their accountants when they're able to assist them with accessing funding. Accessing funding traditionally has not been easy. Many business owners are very disheartened and often don't even try because they've been rejected so many times by traditional institutions and their banks. And so if you as an accountant can play the role of helping them access that funding, it really gives you the ability to strengthen that relationship with them. It's also a great tool for acquiring new clients. We've seen some accountants, trying to win over a new SME client, bring them on board. At the time of trying to bring them on board, they say, in the process of doing this, I can also help you access funding. And that is a big draw card. A new SME client sees this accountant trying to help go above and beyond and assist them with accessing funding, which is so critical to them, is really a big selling point and a great way to acquire new clients and bring new clients on board. And then lastly, there's a commercial aspect to it as well, which is you have the ability to do one of two things. One is you can earn like referral fees or commission, but two, you also have the ability to pass on the savings and source the best deals for your clients to help them access sort of the best possible funding out there. So really, 4 really good points on why we're seeing accountants spend more time in assisting their businesses access funding. So moving on to a short course, a crash course on SME funding 101 in South Africa. Firstly, looking at a high level, sort of taking the 1,000-foot view, there really are 3 main types of providers of business funding in South Africa. These are high-level categories, but essentially you have the traditional banks, and that's the default that everyone thinks of. We've got your big 4 banks, and obviously we're talking about the business banks out there. And then you have what are referred to as the traditional non-bank lenders. So you have a lot of like alternative financiers out there who are typically private companies or wealthy individuals, high net worth individuals, smaller institutions that offer very bespoke, structured type funding, and typically do it for much larger types of transactions because they aren't a big bank with a large workforce. They don't have the same systems, etc., and so they typically focus on larger types of transactions, and are difficult to actually find and get hold of, get approved for. And then lastly, you have what's referred to as a fintech funder company or funding company, like Bridgement, my company. And what fintech does differently to the first 2 types of funders out there, the banks and the traditional non-bank lenders, fintech companies are tech first. So they started in the cloud. So what that means is that they are much simpler to apply to. A lot of the paperwork and the admin and the hassle of applying to the older traditional institutions is removed. So it's a lot more seamless. It's completely online, no paperwork required, and funding can be accessed in as quick as 24 hours. So it's really a very seamless and nice alternative way to access funding as a business. You also typically find that the risk appetite is different and the minimum requirements are often lower. So, for example, you'll often find that a bank will require at least 2 to 3 years of trading history before they will be willing to grant you any sort of debt, whether it's an overdraft or a revolving loan or term loan. Whereas a fintech like Bridgement, we only require 6 months of trading history at a minimum. So we are able to also fund businesses that are slightly earlier stage. In terms of types of SME funding, so there are many different products, and different products cater for differing needs. Different products will solve different problems. Are you trying to finance inventory and stock? Are you trying to finance a purchase order? Are you trying to unlock value that's tied up in your receivables because your customers are taking too long to pay? Are you looking for COVID relief? Are you looking for vehicle or asset finance, trying to finance the purchase of a new expensive piece of equipment or machinery, whatever it is? There really are many different types of SME funding that solve very different needs. And it's always important to have a good idea of what the different types of funding options are out there. You can get lost in the detail, but I thought I'd include some of the main types, which helps to orientate you and understand, what are the actual options out there, and understand, what does it solve the need that your SME client in particular might have. So, firstly, there's the COVID relief loans that came out over the last year. Those have largely come to an end, although there are still a small amount of these being issued, and these tend to be longer term, sort of 5-year loans that are very low interest, and some even have no interest. Some of them also start with a 6-month payment holiday. So those are really great soft loans, but difficult to obtain, and increasingly so as many of those programs have come to an end. Then you have your typical sort of vanilla loan, a term loan for a fixed term, typically 1 to a few years, and those can be secured or unsecured. Typically, when you're dealing with a bank, those will always be secured. Overdrafts are the bread and butter of banks, and usually one of the first debt products that SME clients will get with the bank. Really great for solving cash flow and for ongoing working capital needs on a month-to-month basis. You also have credit facilities, lines of credit, which are like revolving loans or revolving facilities that work in a similar way to overdrafts, but are slightly different in that an overdraft you typically only have to service or pay the interest every month, whereas a line of credit you typically have to pay down interest and capital, or interest and principal every month. Then you also have invoice finance, which goes by many names and has many different ways of offering it. And there's discounting, factoring, supply chain finance, reverse invoice finance, and many different versions of that. But ultimately, it involves providing finance related to your accounts receivables or accounts payables if you're looking at reverse invoice finance and supply chain finance. And then you have merchant cash advances. These are sort of variable term loans largely for consumer-facing businesses, retailers, and restaurants. You have your vehicle and your asset finance, which I'm sure we all know about already, and then you have your commercial or property type finance. So those are some of the different types, and different institutions will specialize and offer different types of SME funding products, but useful to be aware of the sort of the ecosystem or the universe of products when going out to help SMEs access funding. One of the key things to mention here is that obviously I've very much focused on debt funding over here. So we're not talking about equity funding. So I haven't spoken about angel investors, venture capital, private equity, and other types of equity funding, and also haven't talked about government grants. I've only looked at debt funding over here. So some really important things to consider. It's a bit of a nice checklist, this, when comparing SME funding options, and also some common mistakes or pitfalls that we see a lot of SME clients encountering when applying for business funding. So first of all, when you're looking at and comparing different options, I think one of the first things to always consider is the repayment term and what those installments look like, because ultimately you need to consider what is the impact on the business's cash flow, and will the business's cash flow be able to support the repayment of whatever the loan or debt is that they're taking on. Naturally, interest rate is important as well to understand what the cost of that debt is. Also worthwhile understanding all the other fees and costs that come with the loan. So what we see is that many businesses, many borrowers out there completely and only focus on the interest rate, and they completely disregard the 5% fee, charged to open up the account, and the ongoing monthly fee of 1% or 2%, just to have the facility open. These fees typically are ignored, but they actually sort of accumulate and can present quite a significant cost. But often people sort of ignore or miss the impact of that cost because they're so focused on the interest rate. So really important to understand all the once-off and the ongoing fees that come with any sort of loan facility or debt facility that you get access to. Also worthwhile understanding the flexibility and the accessibility of that account. So, if you get approved for a facility, how long do you have to withdraw from it? What happens if you don't withdraw? When you do withdraw, how quickly will you get the funds? So useful to understand that. And then also understanding what happens on early settlement. So many traditional banks and older institutions would typically penalize you for early settling a loan. And it's worthwhile understanding that. What do those penalties look like? It's actually a differentiator that Bridgement has, which is we actually reward customers for early settlements instead of penalizing them. So we actually discount all of the fees or outstanding fees on their account when they early settle. Also, obviously worthwhile understanding whether security or collateral is required. This is a typical requirement that you find with banks and other traditional institutions, where they like to have the loans that they're issuing heavily secured, having some sort of collateral behind them, which is very difficult for many small businesses that often don't have any of that security or collateral. And then worthwhile considering, does personal surety have to be signed? Is the director or the shareholders of the business applying for funding, are they going to have to sign personal surety? Some of the common mistakes that we see when SMEs apply for funding is, one, applying for the wrong product. Touched on some of the different products above, but sometimes we see businesses applying for completely the wrong product that doesn't really solve their business need. An example of this would be applying for a short-term loan when they want to go and acquire a vehicle or a property. There they need a proper vehicle or asset finance, property finance that's structured for 5 to 10, 20 years if it's a property, and applying for a short-term, 12-month loan obviously doesn't solve that. Requesting too much funding or a term that's too long. So again, we see this a lot where businesses will often apply for funding amounts which are in excess of their annual turnover or multiples of their annual turnover, which is just unrealistic. No respectable financial institution will provide funding that is a multiple of your annual revenue. It would just represent a massively high risk, and to be truthful, just irresponsible. And so many businesses sometimes miss that, and try and apply for funding which is way higher than what any respectable institution would be willing to or able to grant them. Having a bad credit profile, any black marks on their credit profile or record is obviously another factor, and it's always worthwhile working on improving those and getting those removed to make it easier to access funding. And one of the common ones we see with businesses is often judgments that they get from SARS for not paying their tax bills, and sometimes they'll remediate it and potentially even come up with a payment plan, but it's important for them to work on actually getting that judgment removed from their profile at the credit bureau, getting it actually rescinded. Insufficient track record and trading history is another one. So sometimes, we have a minimum requirement of 6 months of trade history, and sometimes businesses will come to us applying, with only 1 month, 2 months, 3 months of trade history. Sometimes we have brand new startups that haven't begun trading, applying for funding. And unfortunately, we as a credit provider need data to assess a client. We need a track record to assess a client. And so if the business comes with no track record, we're unable to assess them. Also having too few customers and debtors. You sometimes see with some small businesses, especially if they get a very large government contract or large corporate contract, you find that over 80%, 90% of their revenue, annual revenue, comes from a single client. That of course represents a risk, and credit providers typically look down upon that. They like to see a diversified base of customers, so that if something goes wrong with one of your customers, it doesn't result in the whole business having to close. And also over indebtedness and or lack of affordability. So sometimes you find small businesses that have taken on a lot of debt, and they almost get into a bit of a debt trap, and they take too much debt. So respectable credit providers will do proper affordability analysis and actively avoid over-indebting a client. And so that's another pitfall that we sometimes see SMEs encountering when applying for funding. So hopefully those are two useful checklists to be aware of, and happy to share these also after the webinar. But hopefully those should help you assist clients with accessing the funding they need. So a bit about fintech and using fintech as a funding solution for SMEs. So what a fintech company like Bridgement does is that it creates the ability for businesses to apply using their financial data. So what that means is that a business could apply to us by, at a click of a button, connecting their Sage, Xero, QuickBooks account, or even their bank feed, a bank account. And that makes the process a whole lot simpler and easier for the client. Of course, we cater for lots of other businesses. So if they don't use one of those accounting packages, we cater for every single type of business. So it's really fine if, maybe they're on some obscure accounting package, or maybe they don't have an accounting package, or maybe they're using old like desktop pastel or whatever it is. We've created ways for those businesses to apply as well in a very seamless online manner. But one of the benefits for customers on the cloud accounting packages is that they have the ability to apply at a click of a button, connecting their financial information. And that basically enables a quicker and easier access to online funding without the need for any paperwork. It means what fintechs are also doing and using this financial information is to get a better view of a business and its financial situation. And that results in fairer, better, more personalized products and pricing to improve the types of funding products available to SMEs, and also to improve ultimately financial inclusion, which is especially important for smaller businesses. It also, what fintechs do differently to traditional institutions is that they really have focused on making it simpler and using a lot more transparent pricing with more flexible early settlement terms. So I touched on this a bit earlier, but we really focus on how do we make this more fair and easier for a business to understand the true cost of their total funding. So we, when a customer withdraws funds from a facility with us, they see the total cost that it's going to cost them for that facility upfront, and that removes, there are no surprises down the line. They don't have to read a 200-page PDF like they would get from their bank to understand the complex pricing, the pricing structure. We've actively worked on making that a lot simpler. So there's a single fee. They understand the total cost of the finance. And of course, as I mentioned earlier, we reward early settlements. So we reward customers for settling their funding early instead of penalizing them as you would typically see with traditional institutions. And fintechs like Bridgement also create newer and simpler products that cater for SMEs' specific needs. We've got 3 different products, which I'll actually go into. We do business loans, lines of credit, and invoice finance. So business loans are just term loans up to anywhere up to 12 months. Line of credit is similar to an overdraft, almost like a revolving facility that can be withdrawn from in multiple times and paid up at any point in time and reused over and over. And that's great for accessing flexible funding and to cover sort of ongoing working capital needs, whereas business loans are typically used for if there's like a single once-off cost, or maybe like a smaller piece of equipment that maybe a coffee machine that a customer can't go and buy up front in cash, and rather they want to pay it off over 12 months. And then lastly, we have invoice finance. So we've created a new way of doing invoice finance for businesses. So it's a much simpler, more friendly way of doing invoice finance for smaller businesses with smaller invoices. And that enables small businesses to unlock value that's tied up in their unpaid or receivable invoices. So really helpful for businesses that are struggling with late paying debtors or customers. So I had 2 demo videos of Bridgement. I'm not going to be able to show you those because of the presentation is a PDF, but what I can do is to show you a screenshot of what it looks like for a business to apply for funding on our website. So it's really simple. You go to bridgement.com, click apply now, and you start the application. The first step is the business creates a free account just by putting in their details, mobile number and email. And then the first step we get them to do is to connect their accounting or financial package. If they are using one that isn't supported, that's fine. They can click other or none, and then they can continue with the application process. So that's not a problem at all. And then we get their personal and business details. If they connect their accounting package, the business details are imported automatically. But just to confirm the identity and the details of the individual. And if a business is unable to connect their accounting package, then we give them the option to connect their bank feed or to even upload a PDF bank statement if that's what they want to do. So we really offer and cater for many different ways for businesses to apply. So that's why I said, even if a business is not on QuickBooks, Xero, Sage, and they maybe don't even have an accounting package, they can still apply by simply uploading their bank statements or connecting a bank feed. So that's the application process, and it takes less than 2 minutes. And typically, if all the information's there, nothing's missing, we get a decision within 24 hours of an application being complete. Our record to date is 90 minutes. So a first-time client landed on our website, started an application, completed it, got approved, withdrew funding from his facility, and the funds landed in his account all within 90 minutes, which is really a record. And I think years ahead of what the experience would be like at a bank, where typically it will take 3 to 5 weeks to apply for funding, and a very manual, laborious process. to actually go through. Once a customer is approved, so this is an example of what a dashboard looks like for a customer that has a business loan or a line of credit facility with us. They can manage their facility online. At any point in time, they can withdraw any amount of funds up to the cap on their facility or the credit limit. And when they do that, when they select an amount, they just review the pricing. They can see the total cost of the finance. So they always understand exactly what it's going to cost them, and they can plan and manage cash flow accordingly. They accept the agreement online, no paperwork, no need to download, print, sign, scan, send back, none of that. It's all completely online, built into the online dashboard where you agree to the agreements. And then, of course, you can also track repayments from another tab on your dashboard at any point in time, and also request early settlement and get an immediate quote for a discount quoted if you ever want to settle early. And then we also have the invoice finance product. Similarly, you have a dashboard where you manage your invoice finance facility. And here you see invoices that have been imported from your accounting package. So you see all of your receivable invoices, and that stays in sync with your accounting package. And our system pre-vets those invoices. So it goes and assesses all of them, and it determines which ones we're willing to provide funding on and which ones not. And that's why some of the invoices get disabled or grayed out. But the ones that are available to receive funding on, then you have a little button on those invoices, and you can click Get Paid and receive an advance based on those invoices. And you can select one or many of those invoices. Very simple, and similar to the line of credit facility. You after selecting one or many invoices, you review the total cost of the finance. You accept the agreements online, and funds are released into your account within 30 minutes of doing so. And similarly, you can track those repayments and make early settlements at any point if you'd like. That is pretty much the end of the demo of Bridgement. And maybe just to end off the presentation, just to let everyone know that we do run a partner program where we work with accountants. We have an accountant partner manager who is a dedicated person who sits and works with accountants all day, every day. Some of the benefits of joining our partner program is that in terms of the steps, I mean, it's quite simple. You join the partner program by just emailing partners@bridgement.com. To learn more, sign up as a partner and meet your dedicated account manager. You can also become a certified partner and gain sort of trusted partner status. And you then have the ability to market your funding services to your clients, which we can assist with and share marketing collateral and content for that. And then you can start helping your clients secure the funding that they need. We generate special tracking links so that we can always track what's going on with your clients and give you updates and feedback on the status of their applications. And lastly, of course, you can earn that commission that we mentioned, and you can either keep the commission for yourself or you can pass it on to your clients as a better or improved pricing. So yeah, if you're interested, join thousands of other accountants across South Africa on our partner program, and email us at partners@bridgement.com. That brings me to the end of my talk about accessing funding for small businesses, SMEs around South Africa. Thank you to everyone. I hope you found this insightful, useful, and I hope that you really can take some learnings and insights out of this to assist some of your SME clients in accessing the funding that they need. Some of our social media handles are there in the bottom right, and on the left-hand side, you can see our website link, as well as the email to inquire or get more information on our partner program, partners@bridgement.com. And thank you again to the SA Accounting Academy. Really great to be here. Thank you for the opportunity to speak. Always enjoy talking about something that I'm so passionate about, and I hope that all the members and all the viewers today found it interesting and insightful. Everyone stay safe and keep well. Have a good rest of your day. Apologies, I see that I actually forgot to ask the audience to see if there were any questions. I'll stick around for a couple of minutes. If anyone has any questions, feel free to post them to me or on the chat, and I will be happy to address them. See a question come through. Someone asked what is the costs involved. So Bridgement uses something called risk-based pricing, which means that every client gets personalized pricing. That is dependent on many factors. So it depends on years in business, credit profile, financial position, industry, many factors that come into play there. The rate typically works out to be in the range of anywhere from about 1.7 to 2% a month, and then increases from there depending on the risk profile of the client. That's an all-in rate. So there is no other fees. There is no fee to apply and open a facility. So if you open a facility with us and don't use it, there's no costs incurred. There are no ongoing account fees or facility fees on a monthly basis. And as mentioned, no penalties for early settlement. So that is the single and only cost that you incur when taking funding from Bridgement. So it makes it really simple to understand what the total all-in cost is, and plan and manage cash flow accordingly. No, I see that someone asked 7% a month. Definitely not 7% a month. So the pricing starts from 1.7% a month and then increases depending on the risk profile of the client. How do you reward early settlement? So good question. Basically, when someone early settles, we look at what the total fee was that they agreed to for whatever the finance was that they took out, and we basically just discount the remaining balance of that. So they get the full balance discounted of the total finance costs that they agreed to at any point in time during the course of their term. What's the max amount customers allowed to apply for? So we allow customers to apply for up to 5 million rand. Our minimum is at 20,000 rand, so quite a broad range. We have clients, businesses, sometimes sole proprietors doing 1 million rand a year, really small businesses, up to businesses doing 100 million rand a year in turnover, and sometimes even more. So we have a broad range of clients in terms of size and also industry. We have clients across just about every single industry in the country, and also we have clients in just about every province in the country. So quite a broad range on that. Someone was asking about the how the commission works. So the commission is dependent on the product and the term, a whole bunch of factors at play, but it can be anywhere up to 3% of the actual loan amount. So, for example, if you bring a client to us and an SME client to us and they get 1 million rand for 12 months, the commission on that could be up to, am I getting my math right? Up to 30,000 rand. I think that's right. Sorry, my quick math is not amazing, but yeah, that's what that's an example of what the commission could look like. Obviously, depends on whether it's a 3-month term or a 12-month term, etc. I see someone asked about the max term. So we specialize in short-term funding, short-term being anywhere up to 12 months. So we have clients that will take our funding for 1 or 2 weeks because they use a line of credit facility. They dip into and out of it. Sometimes every month, taking it for a week or two when they have to make payroll or pay invoices, whatever it is, up to 12 months. That's the longest term that we currently do. We may do longer terms in the future, but we currently only go up to 12 months. Our revolving credit facility, obviously that revolves, so that can be used over and over again over many years. But the nature of the repayment schedules are short terms, all sub 12 months. And as mentioned, some clients use the facilities for a lot shorter than that, as short as a week or two. We see it actually a lot. Some clients who have a big tax SARS payment, whether it's VAT or pay as you earn, if they're short on cash to make the payment and they don't want to get hit by the 10% penalty, they take our funding for a week or two or even 3, and our funding ends up being much cheaper than taking an immediate 10% penalty from SARS. So we do see that quite often as well. Great. I think that looks like the end of the questions. If anyone has anything else, any other questions to ask that we've answered, please feel free to email partners@bridgement.com and we'll be happy to walk you through all of that, share more information. Have a great day, everyone, and thank you again for taking the time. Keep well and keep safe.